Okay, thank you again to our partners before we get into this next session on alternative business models, really combining single-family rental, build for rent, and home as a service into a think tank. Take it away.
Thank you, Betsy. Hello, everyone. I hope you have been enjoying the last couple of hours of stimulation. I've definitely learned a lot from our speakers, and the goal of this presentation, as Betsy said, is to think about alternative business models relative to what we've seen in our industry in the past. We have three very interesting speakers. Chris Langford is from the capital side. Daniel Wu is a data and security expert, and then Danny Small is focused on innovation and product development in our industry. So I think it would be a good idea if each of them would start, give a couple of minute overview, please, a self-introduction, and then tell us a little bit about your thoughts on what's going on in the current environment relative to these opportunities for new business models to develop. And from there, we'll look for questions from the audience, and I have received some questions already that I will moderate. Thank you.
Awesome. So, hey, everybody. My name is Chris Langford. I'm a partner at Idea Fund Partners. We are an early stage venture capital firm where we focus on businesses anywhere from pre-revenue to $2 million of revenue. But my history in the housing space has been about 15 years. I spent the beginning of my time in investment banking, where given the time period, housing, home builders, distribution companies, and specialty services companies were kind of in vogue to the M&A market. So I spent about 7 years helping companies raise capital and acquire companies and be sold. I then spent the last 8 years at Lowe's, the large home improvement company, where I did everything from run corporate strategy and corporate development. To the last 5 years while I was there, I launched and was the managing director of Lowe's Ventures, where we looked to invest in early stage companies that were really reimagining the concept of homes and housing and the relationships between people in their homes. So, this is housing as a service is actually one of the topics that we thought about pretty heavily, given that we were focused on do-it-yourself for the bulk of our history at Lowe's. And, we saw an increasing desire to have, more flexibility, more outsourcing, et cetera. And so this is an area that I think is really interesting. And I think the current environment will have an interesting impact on how people think about the relationships with their homes. I think on some aspects, people are probably getting a deeper appreciation for having their home and maybe building a deeper relationship and really valuing the fact that they have access and ownership of that asset. But it'll be interesting to see the financial ramifications on the housing market, and if we do have a second impact to the housing market, how that ultimately changes some people's relationships. So thanks for having me. Looking forward to be part of the conversation.
Thank you, Chris. Dan Wu, do you want to go next?
Sure. I'm really excited to be here. Thank you, everyone, for inviting me. So I am a privacy counsel and legal engineer at Immuta, which is a automated data governance platform. So privacy counsel just means that I'm I'm smart on data regulations like GDPR, CCP, healthcare data regulations. Legal engineer is sort of a weird term, but essentially what that is I'm sort of at the intersection of law and product. So I translate a lot of legal requirements in these data regulations into product requirements, working with our software and data science teams, because a lot of the customers that we work with are highly regulated organizations that have sensitive data. They want to use that safely. So our product essentially helps them do that and implement best practices by default. Reason I care a lot about housing innovation is a lot of reasons, but I did a PhD at the Kennedy School focused on social policy and sociology, really looking at affordable housing. So my interest in a lot of this is around affordability and inclusivity. More generally, I consider myself an advocate for data ethics and inclusive urban innovation. For instance, I published a piece in TechCrunch that mapped out lots of different innovations around what I call the field of inclusive housing innovation, looking at hundreds of different startups. And I've sort of written other pieces in places like Fast Company and presented at Bloomberg. So I'm really interested in this conversation, thinking a lot about that intersection between the digital realm and the physical realm, and sort of the implications that has to improve and increase value, but how do we do that in a safe and responsible way?
Sure, thank you. And Danny, will you give us your introduction?
Sure. My name is Daniel Small. I have spent a little over 20 years in the construction and specifically building products industries. And my expertise is in what I call engineerization, or kind of combining science with the art of innovation, using data and a scientific Lean Six Sigma approach to the innovation process to de-risk innovation and provide more consistent, reliable, lower cost and faster results to your product and service innovations. As far as this topic goes, there's a reason that I'm focused on construction, because it obviously I've spent my career here, and I always tell my clients, your customers don't really care about your product, frankly. What they care about is getting a job done. I subscribe to the philosophy and the lens of jobs to be done theory, and I use that a lot in helping my clients to improve their innovation results. But housing as a service and single family rental are two trends that they're great examples of stripping away the non-essentials in the housing job to be done, as we call it, which in this case, in this example, would be just providing housing for oneself and one's family. So ownership and size and commitment are things that have been important in the past, but nowadays they're not as important. And so we're starting to see these types of trends come forth to adjust to these shifting priorities in providing housing for one's family. So I'm very interested in this conversation, very excited to participate in it, and appreciate the opportunity.
Danny, why don't we stay with you? Will you give us a couple of examples of these trends that you mentioned relative to home as a service?
Sure. So for example, home as a service, essentially, again, there are others on the call and having presented this morning that are far greater experts in this specific area than I am. But to my understanding, home as a service basically is the idea of providing, again, this core job to be done, which is providing housing for me and or for my family, without necessarily needing to focus on things like home ownership or equity or a lot of square footage or commitment to a certain location for a long period of time. So it's a great model for adjusting to what have the way the priorities in consumers' minds have changed over the years. And so providing things like zero commitment or very little commitment, not requiring people to stay in a place for many years, not requiring a down payment, providing communal or shared services for a lot of the things that are really things that nowadays a lot of particularly younger customers aren't really that interested in owning, right? It's kind of like an Uber type of a model for housing, where I as a consumer nowadays, a lot of people just really aren't into owning a house. They just want to have the things that a house brings, right? They want to have shelter, they want to have safety, and they want to have community. They want to have entertainment. They want to have education, access to other amenities and things like that. And so housing as a service provides those things at a very simple monthly fee, for example, or a membership fee, where people have access to everything that they want to have access to without the burden of owning something or maintaining something or cleaning or the rest of those things that
Long-term,
go along with
yeah.
home ownership. Right.
Yeah, the long-term commitment. It's interesting because Matt Blank mentioned today from BB Living, one of the build-to-rent operators, that 2/3 of their tenants move out to buy a home, and their first home is actually a move-up home. So they have a chance to think about what they care about in that home before they make the commitment, or where they're going to stay, where they're going to raise their families, that kind of thing. Chris, based on your background in our industry, in the home improvement side with Lowe's, what do you see in terms of the trends, homes as a service, when we think about it from a DIY perspective? I know Home Depot and Lowe's have been super busy for the last few weeks. When we think about it as a DIY versus these trends that might be pulled into the industry overall.
Yeah, I mean, I think when we studied the concept of home as a service, I think one of the most important elements of it is the belief that the concept is actually a continuum. It's not an either or. So I think oftentimes when people start with this concept, they think, you either own a home or you rent a home, right? You access a home, and that there's this kind of line in the sand. And our belief is actually that there's this broad continuum around the concept of home as a service, which is a personalized maximization of a particular view between financial participation, responsibility for the asset, and then optionality, right? So we actually think of it in this term as like a 3-factor equation that people are optimizing for. So on one end of the equation, the vast majority of wealth in America has been created. The disparity between homeowners and non-homeowners in wealth creation is pretty vast. And so there is this argument that, I'm a renter, I'm throwing money away, right? But, I think one of the things that especially new homeowners are looking, that there's not an accurate view of what I call total cost of ownership, which is everyone can price out what a mortgage, taxes, and insurance is. But do you really know what the maintenance is? Do you know what the escrow on systems repairs are, replacements, upgrades, et cetera? And theoretically, if you were to aggregate all of those expenses, you could drive them down. And does there become an equilibrium point where, institutional ownership of assets produces a great ROI on one end, and rent plus cost savings produces an ROI on the other, right?
Yeah, sure.
So I think it's I think for me, one of the core elements is just this belief that it isn't a line in the sand, and that everything from, single family rentals to multifamily to, even next generation warranty contracts and product subscriptions are all part of the concept of, turning housing into more of a service. And I think I think everyone picks and chooses the right combination between, the financial inclusion, the level of responsibility they want to take, and how much optionality they want in their home. And all that then combines into some level of thinking of what used to be purely an asset into more of a service-like thought.
So thank you, Chris, and taking that to the next level, Dan Wu, as we, as homeowners, tenants are sheltering in place for the last month, and in some cases for the next few weeks and months, and starting to use our homes as a workplace. What do you see as the trends there long-term in terms of product development, firstly, and then secondly, in terms of security and maintaining secure platforms to communicate professionally on data that might be sensitive or confidential?
Yeah, absolutely. That's a fantastic question. I think what we're already seeing is that COVID-19 is exposing a lot of trends that have been slowly kind of going for a while. For instance, there's been a huge uptick around remote working, the use of things like Zoom. I think that, for instance, with Zoom, there was recently a letter sent by some senators to Zoom because more and more people are not only using it for work, but also younger younger people, children are using more and more online communications. And so that data becomes a lot more sensitive. And we have to think more about, okay, if these new platforms that we didn't necessarily think was the intended audience, how do we protect the sensitivity of more vulnerable populations such as children that are on these platforms? And so that's going to be a huge thing as we work more remotely, as we live more remotely. I think the importance of securing that data becomes all the more important, and that we use it appropriately. I think another trend that this is exposing is that, and I've seen this at my company, more and more people are becoming more okay with working remotely. So full disclosure, I'm biased. I love working remotely. I've been a remote worker for the last 2 years. I think it offers a lot of interesting flexibility and you become a lot more productive. I think generally speaking though, people have it's not fully accepted. I think what more people are seeing is that in some cases, working remotely may be a good thing. And I think that's going to have a number of sort of bigger impacts. So for instance, there are increasing trends of people being okay with living in sort of what's called like a second or third tier city. So a lot of millennials, for instance, live in like the New York Cities and Seattles and San Franciscos of the world. Some people are going back to their hometowns. Some people are moving to cheaper cities, realizing that, okay, now that remote work is more of an option and perhaps it will be increasingly so, post-COVID-19, we may see a move towards the second and third tier cities, quote unquote, a move towards different kinds of housing environments and housing choices. For instance, Minneapolis recently created a change in their zoning that would allow for the rise of ADUs and the rise of duplexes and triplexes. I think that's only going to spur more and more millennials who are less comfortable with this idea of really expensive, owning like a big McMansion in the suburb, or really getting dissatisfied with high rents and the New York Cities of the world, to be more open to living these alternative living environments in the second and third tier cities with remote work, with sort of the fault lines exposed through COVID-19 may accelerate.
It's interesting you mentioned the accessory dwelling units, Dan, because we actually had a question about how will ADUs shape the housing as a service industry going forward. And what I have noticed with ADUs, and for anyone who's not aware, these accessory dwelling units had been approved for zoning on the West Coast, initially up in the Pacific Northwest, and now almost throughout the country. And what a lot of people had been doing is installing them in their backyard as a place for children to live, in particular college students or grandparents or a housekeeper or nanny, something like that, in some cases using them on Airbnb to create additional income. But what I've heard of more recently is homeowners downsizing into the ADU because it's such a neat little house, innovative, well-designed, and renting out the bigger home to a family or a growing family that needs it. So what do you think maybe Danny, we'll go back to you in terms of ADUs. Do you have any experience with these as you consult on innovation for your customers, and what do you think the trend might be there?
Yeah, I've actually got a fair bit of a background in modular and offsite manufacturing. I spent some time with a software firm that is focused on that, and have done a fair bit of consulting work in that area. And the way that's related, of course, is many ADUs are being manufactured off-site, and this is certainly a really intriguing trend for me as well because of that. Because I'm a huge fan of industrialized construction. I believe that it is one of the most accessible and realistic ways that we can address the housing shortage that we're experiencing, and so I think that it's a very powerful potential model for housing as a service. I'm not sure that I have yet connected the dots for how that can work, because housing as a service implies that you've got a lot of infrastructure going on where you're providing services along with that housing. And so being able to bring that all together in an ADU setting might be a little bit difficult, because those are typically owned by individuals, and providing all those amenities and services may be a bit of a stretch for that particular delivery model. But
Yeah.
certainly ADUs is powerful as far as providing supplementary housing and additional housing that we desperately need right now.
Any way I think that we can industrialize housing through innovation, through manufacturing, for example, I know that Skyline champion in a bunch of their factories around the country where they produce more traditional HUD code or modular homes are also producing ADUs and getting those out into the community settings. But the question is, would they be set up as dedicated communities of smaller homes, modular homes, or even as rental homes? Have any of you run into that, Chris, as an investment opportunity? Have you seen anything like that?
I mean, we've seen it a little bit. It tends to be what I've seen is things that are focused like on senior living communities where, you know, someone's naturally looking to downsize. The community aspect helps to offset, you know, loneliness, which is like one of the biggest issues with the senior community. And so, you know, people can dedicate more access to shared spaces and more communal events and things like that, as opposed to land itself and upkeep. You know, I still think one of the challenges with ADUs is financing, right? There aren't a lot of innovative financing options for ADUs. And so what I've tended to see the vast majority of ADUs being used for is one of two things. Either it's one of the cheapest ways to build an Airbnb rental, right? And just monetize. Or it's a affordability hack, which is, I live in LA, my taxes keep going up every year. I can't afford to live in this house anymore, but I do have this underproductive asset that I call my backyard. And if I just put a backyard cottage on there, I can offset, you know, my rent payment, my mortgage or my taxes or whatever that happens to be going on, right? So thus far, we haven't seen a proliferation, at least in the early stage, of community-based ADU. It's been more one-off and investor-oriented on our end.
Sure.
I'd love
Thank you for that.
bring up something.
Yeah, please.
Yeah, I think those are fantastic points. And to bring it back to this idea of housing as a service, one trend that I've seen increasingly going to some of the pain points that you identified around ADUs is how do we create a workflow for homeowners to kind of order ADUs and get those installed more quickly and more easily. So one example that I can think of is this startup called Cover. Build, and what they do is they create a workflow. Yeah, you've heard of them. They create a workflow that not only allows you. Okay, fantastic. Okay, so you're on board. But I think what's interesting, from my understanding, they haven't necessarily tackled the financing piece, but in terms of this idea of creating a design, finding what sort of matches with the zoning regulations in your city, they've kind of like simplified that process. There's some other startups like Dweller that has interesting financing mechanisms that allow people, so they basically become like a pooler of financing and kind of, get interest in sort of plots of land in the backyard so that they can sort of further finance what they're doing. I think there's some work that's being done there, but I think what's really interesting is that because the landscape and zoning regulations are so complicated and fragmented, more of these workflow type tools for homeowners are going to be all the more essential, because if you're the average person, it's going to be really hard for you to do this project. So 100% agree. I think housing as a service, that sort of mentality has a really, really important role to play in sort of interventions and innovations that are sort of at that intersection of law, finance, and technology. Law, finance, and housing.
One of the attendees actually shared his perspective, Rodney Hall in Texas, that in some cases you can get better financing when you have a duplex, but rental income in one of the units. So it's a buy plus a rent opportunity. We have a question from Michael Dickens, which is interesting as a concept that I've heard percolating for the last year or so, and I'm curious if any of you have started to address it in your businesses, in investing for Chris or consulting for Dan and Danny. And that is that some of the utility companies, the services companies such as HVAC equipment, for example, are starting to provide bigger contracts or subscriptions to at a community level to get into that service type business. Is that something you've run into at all, whereby they would own the equipment up front? It's almost like the way multifamily would be set up.
Yeah, I've seen some of these models, and again, I think it all goes back to the same general equation, which is called, the financial plus responsibility plus optionality type thing, right? So, I think that I particularly think that younger people are much more data driven. I feel like they've lived in a world of vast information and they use a lot more data when they really think through decisions. And so I think these models will proliferate if the model is set up to benefit both parties. And what I mean by that is you take a utility that has a gigantic balance sheet, therefore theoretically has much higher purchase power, much higher ability to aggregate service and parts and all these other things and drive down the cost of each unit by a substantive factor, right? And if what they're able to do is then find an intersection where they can amortize the cost of that to a homeowner, and the homeowner ends up coming out as a positive ROI on that, and they do, then I think it wins. But I've seen too often where when people want to servicize, that's not a word, but I'll just pretend like it is, things, it almost always comes across as like, well, it costs more, but it's more, but it's easier, right?
Mm-hmm.
And I think cost more but easier works for a subsegment, but it's a lot smaller subsegment than, oh, it's easier and costs less. That's everybody. Like that literally works for everybody, right? And so
That's Amazon.
yeah, I think
Yeah.
it proliferates when people decide to share the profit pool a little bit better. And I know there's an equilibrium of scale that has to be achieved for that to happen. But I do fundamentally believe that major systems in the home could very easily be turned into services by someone on the back end that has a bigger and broader balance sheet. But it does take not being greedy, I guess, is the best way to describe it, which is hard to say as an investor.
So someone else is going to make the investment up front, but they need to get the return on capital to justify that. As an add-on to that question, Dan and Danny, one of the attendees sent us a question about improving the healthiness, the wellness of our homes, whether it is as a service, but air plus quality type issues. I know Gene Myers from Thrive in Denver is very focused on this, has won awards for it over the last couple of years, but how do we actually make that more available? Because if we can differentiate single family homes as a percent of total sales have actually been losing share to existing home sales for the last decade or so. But is there a way to reverse that trend now if the homes are healthier without being too much more expensive? As Chris said, maybe somebody else can absorb the upfront cost and then make it available house to house.
Margaret, this is a real passion area for me because I spent most of my career actually as a building scientist as well. And so energy efficiency and health and durability and all the things that come along with high performing buildings is certainly near and dear to my heart, and something that I preach whenever I get an opportunity. And I definitely believe that there are ways to reduce the cost of high performing buildings, and that it should be an imperative among anybody who is building housing or any type of building really, because when it comes down to it, the reason that we build buildings is for the people that are going to be occupying those. And so we have, I do believe, a moral obligation to create buildings that are going to serve the people who occupy them through comfort and health and durability and low maintenance and all the rest of those things. And there are certainly ways to do that. Again, industrialized construction is a great way to go about that, to standardize a lot of components and to be able to shift priorities such that you're getting the high performance without the inordinate increase in cost that you would normally see.
So Danny, in terms of you reference your passion for innovation and the industrialization of our industry and Six Sigma and so on, but the way we build houses today has not changed for decades, centuries, really. It feels to me in terms of, right? In terms of working from home and remote access and so on, I feel like we've seen more improvement in the last 4 weeks than in the last 4 years. Have you noticed any trends, improvements that have accelerated in our industry? I know title companies are doing signings, some inspections are being done off-site right now, remotely via Zoom, FaceTime, and so on. Anything else on the manufacturing side as of yet?
Not that I've really noticed. I mean, manufacturing evolution will take a little bit longer for people to adapt, but as I wrote in an article a few weeks ago, I definitely see one of the trends for construction coming out of COVID-19, I believe will be more fuel to the momentum behind offsite and industrialized construction, because this, like Dan pointed out, we're learning by being forced to. We're learning to be able to do things remotely, and we're learning that, hey, it's okay. You know,
Yes.
we can be productive. We can get things done, and you know what? In a lot of ways, we can do things better by doing them offsite, and which has been the mantra or the argument that the offsite or industrialized construction folks have been trying to make for many years, that hey, it can actually be better when you take it offsite. And so I believe that this pandemic will, along with many other things, it will force us to get more comfortable with the idea of doing more things offsite and remotely and relying more on technology and advancing ourselves. It will propel us along that path.
It was interesting because we heard some conflicting themes this morning. One of the speakers was saying he expects the cost to build to fall dramatically, both labor and materials, because overall units starts are going to fall so much. But then I was talking to someone else who said that a lot of their subcontractors left immediately when it looked like there were going to be shutdowns state by state, and also like the borders were going to be shut. A lot of their best subs drove down to Mexico, and they're not sure they'll be able to get back if they're not documented. So it'll be interesting to see how that plays out. I want to switch gears a little bit. We have 2 or 3 questions that have come in around wealth creation, and I know this came up this morning as well, how a lot of individuals buy their first home, they want to get onto the property ladder. They perceive that as a way to create wealth, which it always was in this country until about 10 years ago, when a lot of that wealth was eroded, unfortunately, and the confidence with it as well. So we have a couple of questions asking about the opportunity to rent to own. So to rent a private home, which I know some operators like Dalton Communities in Florida are offering, but also to invest in the stocks of the REITs. And if the REIT geographical diversification should be managed somehow, that different people could invest in different REITs. Chris, as an investor, any thoughts on build to rent, wealth creation at a home level, private home, occupant, tenant level, or from the stocks or anything in between?
Yeah, I mean, there's been some activity in the rent to own type model. I think we've seen it particularly at the lower end of the market, where there's sometimes a bigger spread to be had. I think one of the difficulties in the concept of rent to own is it kind of requires it either requires a market that's so inefficient that the investor can make a ton of money while still giving up a piece of the margin. And I'd say the traditional single family renter is probably not making a margin that's high enough to be that inclusive. So I think that's a little bit of a challenge. It also requires transparency and trust between the two people. I think it works in the semblance that the renter takes better care and maybe takes more ownership of upkeeping the property, and therefore it has to somewhat drive down the costs of maintenance and some other things, like for most investors to kind of get in on that. But I think that's been a little bit of a challenge for the rent to own market, is finding the sweet spot between someone who is for some reason choosing to or has been shut out of the housing market, and finding enough of an arbitrage in the financing between the two for both sides to split and be happy with what comes out the back end. When I think when it comes to the single family REITs and investing in them, I think part of it was really centered around this concept of, playing the geography. Let me live in Cincinnati and play the Seattle housing market. One, I'd say most single family REITs are pretty concentrated in specific markets where the economics of single family rentership prevail. That's Sunbelt states and maybe some other, some hotter markets, maybe Seattle and places like that. The one slippery slope I've always thought about on that is, if you're able to segment the market like that, do you further exacerbate the affordability crises of some of those particular markets by flooding the market with more and more capital that then takes more and more homes off the market and therefore drives up prices? So, I've always had a conundrum with the concept of the single family REIT. Like, I know that at some level, it provides an asset that people are looking for and doesn't throw the market out of equilibrium, but I do think that you can tip the scales by over allocating to that and create pockets of affordability crises. So I know, I'm sure other guys on the panel here have some thoughts on that. Yeah.
Dan Wu, what do you think?
Yeah, no, this is a fantastic question, and I really love those responses. I think another thing we can start thinking more about are the rules around zoning and what kinds of housing is allowed to be built. I mentioned Minneapolis and sort of their moves to kind of expand the types of housing that's being allowed, all the way from ADUs to more like triplexes and duplexes. I think if we're going to think about wealth inequality, we also have to think about how some of these rules may be creating types of houses or sizes of houses that might be excluding people who don't have the means to purchase them. And so thinking about ways to fairly relax some of those rules so that there could be more types of innovation around the types of housing that's being built for whom, the sizes of those houses, I think is super critical. Very relatedly, again, going to this idea of rules and governance, is we could also be thinking about alternative home ownership models, such as, rent to own was mentioned, but also trying to think about permanently affordable housing models, such as land trusts and limited equity co-ops. And, again, how we're going to scale and finance those are going to be really complicated. But I think they're really interesting because essentially what these models do is allow the owner to have an interest in sort of this permanently affordable housing that might be tied to, for instance, like inflation or cost of living, so that by the end of it, there is some growth, but it might not be as compared to a similarly priced home that underwent lots of growth 10 years later, it might be significantly less. And then the next family can kind of have an earlier way to enter that ownership market through, again, the land trust or limited equity cooperative. And so, again, these are more alternative ownership ideas that sort of bridge this idea of like owning everything, owning all the bundles of property rights in a home, but also still allowing people to access housing in a more affordable way long term, because there's more and more of an argument around how do we create housing as, this might sound a little radical, but can healthy housing, quality housing be a more of a human right versus something that's a speculative asset? Those are questions that we should be asking in our society. And I think COVID-19 is really exposing the fault lines around all the wealth inequality that's been happening right now. Even Ray Dalio is talking about it in terms of that being one of the major cycles of increasing wealth inequality and wealth gaps. And so housing is, I think, a major, major anchor for that. And we can be thinking about alternative models as well.
I'm also a big fan of Ray Dalio. I love people who are positive and successful and share their ideas with the rest of us. So it's interesting, and Manzoor had mentioned this in the presentation right before ours about the trend towards co-living, co-officing. Chris, going back to home as a service, where do we shake out on all of these trends? Because a lot of the opportunity for affordable homes was in smaller homes, shared living environments. It seems like a lot of that is going to switch now, but if there are products, services that are available and provided on a gross level, but available to be used on a retail level, that will be beneficial to a lot of these lower income families, some of whom have been really devastated in the changes in the last few weeks.
Yeah, I mean, I think that as a society in general, right? So more and more people have stayed in a rentership cycle for a longer period of time and delayed milestones. that have grown them accustomed to the concept of home as a service. And I don't see those trends, those particular trends, reversing anytime. Like, people get married later, have children later, etc. One of the things that we found at Lowe's, though, was there was a big period of time where we said, millennials don't want to own homes. Like, that was kind of an internal statement that we were rallying around to some degree, right? And we were a little freaked out about it. And the truth was, it wasn't about an age cohort. It was about a life stage, right? You get married, you have children, et cetera. You begin to want other things. I think one of the biggest trends that I'm looking at when I think about the application. So I think co-living is an interesting way to get people into housing in a more financially accommodative manner. I don't know that it fully solves the problem we're talking about. I'm actually really interested to see how, blockchain is ultimately applied, because I do think when it comes to financial inclusion on housing, we again see things as black and white. I either own it or I rent it, right? And there is this gray area, which is, here's an asset, someone has title, someone has occupancy, both parties cooperate to increase the value of that asset. And then at the end of the day, those parties should be able to negotiate something that seems fair from a financial remuneration and sharing, right? And I do think, I think we're a long way away from having enough data and enough liquidity in sort of a blockchain-driven market to be able to share in that. But I do think that there is this, I do think one day, as we aggregate data better, and we will be able to figure out a way to share the value of housing without living within the construct of own and rent, and that more and more people will be able to and I think that can help people maybe that have less financial means access this in some form or fashion, but also participate in some of the financial upside.
Thank you. Danny Small, anything to add there in terms of home as a service?
I think Chris and Dan have really covered it very well from a financial and legal standpoint.
In terms of, Danny, our industry leader, our group leader, George Casey, had sent in a question about the opportunity, if folks are going to stay in existing homes but increase the density, use them more, live, multi-generations live together, that the opportunity for a national remodeling company would be great right now, because they could leverage scale in terms of the services, the materials, the sticks and bricks that they're acquiring. Would you address that from your perspective? And then Chris, maybe because your background with Lowe's, you could talk about that as well.
Yeah, so that's an aspect that we haven't touched on for sure, and I think it's critical because from a building efficiency and building performance standpoint, the hot topic has long been, how do we advance our codes, and how do we exceed the code even to build new buildings that are high performing and meet needs. But I think an underserved topic has always been the remodel and the upgrading of the current housing stock. When you think about just the balance, obviously, 95+% of the houses that are available are existing stock. And so if we really want to make a difference, then that is a huge, largely untapped area for not just building performance, but also for these additional models to improve what we've got and modify it to make it meet our current needs, our advancing needs, but also to build into our new buildings flexibility that is future-proof, that allows for future adaptation to as needs and priorities evolve over time. Again, industrialized construction provides potential for great adaptability in the future, because you can really create a building that is truly modular in that not only is it put together quickly on site, but it can be disassembled and reassembled and reconfigured and moved and expanded very relatively easily and quickly in the future. And so thinking long term and thinking about how we're going to, and learning from the lessons of the past and understanding that, you know, priorities are going to continue to change. They've changed dramatically, and we need to be able to build buildings that are going to be responsive to those changing needs in the future.
Thanks, Danny. You mentioned earlier some of the articles that you're writing. We had a question if it's possible to be added to have a email list, a distribution list for your newsletter. You could share with the group. Maybe Betsy can grab that.
Certainly.
Yeah.
If anybody wants to be subscribed, they can. We can figure out some way with Betsy to share my information or get their information to me, or somehow get them hooked up with that.
Well, thank you very much to all of our panelists and our attendees, and to Ayumi for beautifully illustrating our conversation. And we'll see you in the next lounge.
Thanks, Margaret.
Thanks, Thanks.
Thank you. This was fantastic.
Chris. Yeah, nice
Thanks,
job,
everyone.
everyone.
All right. Thank you, everybody. So please take this opportunity to visit the lounge and share any more questions you might have in the chat box. And we will be back here at 2 o'clock for the home delivery panel. Thank you, everybody.
Thank you.
Yeah.